So something you might hear me mention on a lot of these videos, or you might see mentioned on Twitter or any of the trading related materials, is you'll hear a lot about key levels. And if you've gotten my ebook, you know a lot of that is centered around these previous day's close, these red to greens, 52s, whole dollar, half dollars, etc. So today I'm going to break down some of the most commonly used and key levels that you should particularly be focused on for short-term day trades. Hey everyone, before we get started, be sure to like, share, subscribe, and ring that bell to be notified as soon as we drop a new video. All right, that being said, I am lead trainer with Stocks to Trade, Tim Bowen. Today I've got an incredible runner. You know, it's funny, it's just amazing the volume we get in penny stocks these days. You know, this is a stock that's a little bit higher float than we tend to focus on, but you can see if you look at the float relative to the volume, we've got float rotation here. So we're talking about ANY. Today is September 2nd, 2021. Feel free to jump back, bring up the chart. And I'm choosing this stock just because it's quote unquote the best play of the day. But understand, if you're watching this video in November or December or June or 2022 or 2023, don't focus on the ticker. Focus about the levels and the thesis and the how and the why I'm talking about. Because listen, ANY is just a penny stock, but it's a pattern that repeats and repeats and repeats. So every time I give the ticker, you can insert it with whatever the big runner of the day is, whatever the big runner of multiple weeks, which is hence the reason we're talking about ANY. So don't fixate on the ticker, fixate on the levels and the how and the why behind it. All right, that being said, let's get to work. So ANY, let's break it back. Number one, you can see big former runner. Okay, this stock, I mean, I'm looking at the 1 year chart, and you can see this thing has put in 1, 2, 3, 4, 5, 6, 7. This is basically the seventh run this year. You can see it tends to trade exceptional volume. I mean, look at that day back in June, 200 million shares. Again, today I'm recording at 11 a.m. Here we are at 60 million shares. I mean, we've still got 5 hours left in the normal trading session. So you've got a stock that tends to move. Again, it's an in-play stock. They've raised money. I mean, there's just so many things to love about this stock. They're tied to a hot sector, etc. So it should be on your radar. Should have been on your radar when it went from 450 to 6, 650 to 7, 750 to 8 today. And here we are sitting at 9, and it's probably going to break the high today into the afternoon. Okay, that being said, I'm not fixating so much on why, it's where. Okay, where are we going to trade this? What are the levels we look for? So the biggest thing we're going to always start with is breaks of the 52-week high. Okay, what that does is, I know we talk about bag holder charts a lot, and people like to hold on to stocks forever, but I don't know. I mean, in this day and age, I don't necessarily look back at the 2-year, 5-year, 10-year chart as much anymore. I think that one of the things that has changed with how busy the stock market is, how many big runners there are, I don't think people hold as long as they used to. You've heard me whine and cry about like the dark days of day trading, and I always talk about like that 2011 to like 2015 area where we just didn't get the runners, we didn't get the volume, and when you did get a runner, I mean I remember being like shocked where it was like, oh, we had 20% movers today. These days, I don't even, if a stock's up 20% in pre-market, I don't even look at it. I'm like, whatever. There's 3 stocks up 200%. So the point is, I just don't think people are as desperate, and they don't hold as long as they used to, because back then you would go months without seeing a big runner. Now everyone is programmed to know that, I mean, if you got bagged, if you took the wrong trade, just give up and move on. So that's why I look at that 1 year chart. That's why I care about 52-week highs, because number one, it's in vogue. And I think this has been in vogue since 2016, and I think it's going to tend to stay in vogue, that everyone's running 52 scans. I mean, I think if you looked into the trading rooms of like every day trader, I think 95% of them have a 52-week breakout scan because they know stocks that break out. I mean, it becomes a self-fulfilling prophecy at the end of the day. They know when a stock hits 52s, it's like bing, 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 bing. Everyone, it goes off. Then you got a stock like ANY that's a former runner. Bing, bing, bing. Trading unusual volume, hot sector, et cetera, et cetera, et cetera. It lights up across the board. So you can see when this thing breaks 52s, even when it failed back here in August, when it broke that 52 level of 4, gapped up, it went as high as 650 before slamming back. I mean, listen, if you're agile, that's a 50% move to the upside. Now, you're not going to sell the top, but maybe you buy 450, you sell 550. I mean, that's not a bad day trading. And then you look at a few days ago, well, it would have been the 27th, so that would have been last week, but still trading days, just 5 trading days ago, when it breaks that 52-week high at 576. That same day went as high as 768, pulled back, closed at 640. Again, that next day breaks at 650, goes up to 750. Today, that recent 52-week high would have been 665, which was also the previous day's close. Okay, that's the next level I want you looking at. So when stocks break out to 52-week highs, then we look for those red to green moves for entries. Now, Sphere, maybe not a perfect example of a red to green, but you can see it did go red right at the market open, consolidated VWAP, and then dipped red for a second. Now, again, I'm not saying this is a perfect red to green idea, but we love to see those stocks that break out, pull back, because what that does is lures in the short sellers on that first red day. Okay, listen, I know I don't talk about shorting much these days because I think the edge is on the long side. I mean, remember, I was short bias trader from 2007 to 2015. 2016, the world changed, and shorting's a valid strategy. I know I get yelled at a lot that people are like, oh, you're anti-short selling. Not at all. I just think the edge, there's always an edge in the market. And I think the edge post 2016 is swung to the long side. Now, again, for almost a decade, 2007 to 2015, it was swung to the short side. Recognize where the edge is. So that's the point I make a lot. Then what that does, that red open, that weak open, lures in shorts because they're guessing it's first red day. And again, stock like ANY, I mean, look at this run from 4 all the way up to 7. People think, okay, it's time for the pullback. Then when it goes back green, they get scared. Then when you break that previous day's highs, which I think is the best entry on ANY, so now you've got at 750. Okay, so bear with me. 750, what do you got going? New 52-week high, break of previous day's highs, post red to green, stock reclaimed VWAP, whole dollar, half dollar. Okay, I think I ticked off 5 things, but there's so much going on at 750. And it's just, again, it's just a level where people see that big green candle. There's so many alerts, so many psychological factors in play at that whole dollar, half dollar, that I think that's an incredible entry, okay? And you can see it goes as high as 950. Again, you're probably not going to hold for 250 a share, but look at those 5-minute green candles in a row. 3 of them in a row, 1 red candle, then 2 more greens, 1 red, 2 more greens. So, I mean, there's so much potential upside when you line up as many key levels as possible. And again, those are 52-week high, previous day's highs, red to greens, whole dollar, half dollar, VWAP, the number one indicator that I think you should be using, and all of those come together, you've got a great risk to reward trade. Nothing's guaranteed. Listen, it could have hit 750 and it could have failed, but you stop out on VWAP, you lose 25 cents a share for a potential $2 of upside. So, what I would recommend you do, and I have a lot of these worksheets in the Steady Trade team, if you're interested in more of this, I mean, I can only spend so much time on a YouTube video. They tell me keep these videos under 10 minutes. Sometimes I make it Usually I talk too much and I don't make it. But I mean, it's YouTube. You know, I'm specifically told don't ramble on. People will close out of the video. So the great thing about the Steady Trade team, if you really care, okay, if you really want to learn this stuff, you really want to get better, 2 45-minute webinars every single day. And again, as I was saying, we've got worksheets where you can start ticking these things off. Now, I would love to see you in the Steady Trade team, but if you're not ready to make that commitment yet, do your own worksheet. All these indicators that I broke down, put them on a sheet, print them out, and when you're looking to trade that big float rotator with news, make sure you're checking all those boxes. Because listen, if you're under the PDT, you can't trade every runner, okay? You've got 3 day trades in a rolling 5-day period. You have to be selective. Maybe you're not under the PDT, but you have a job or you have school or you have other commitments. You can't trade every day, okay? So the biggest thing you need to do, whether you're under the PDT or you're part-time, is you need to have a process and you need to be selective, okay? One of the reasons you're probably watching this video is you've tried random stuff and you've gotten random results. The more odds, the more factors you can put in your favor, the better the potential for success. And when we focus on these key levels, there's a better chance you stick to your stop as well, because you're using those same levels for your stop. VWAPs, green to reds, okay? Say maybe you were really quick, again, and you took that red to green on ANY. You would, at say 675. You then stop out on a green to red because now it's a failed breakout. So now you lose 20 cents a share for that potential upside. Or you're trading whole dollar, half dollars, or you're trading 52s, or you're trading breaks of previous day's highs. It makes it, air quotes, easier to stop out when you know those levels come in play. And again, hit the link below. I talk about the ebook a lot. I mean, it's $20, $18, okay? I think it's just, for the price you pay, it's a great companion to this video because every single one of those 10 chart patterns I talk about in that book are keyed to key levels. I mean, all of them. There's other setups we trade, but every pattern in that book is tied to everything we talked about in this video. All right, everyone, get the ebook, get Stocks to Trade. Most importantly, check out Steady Trade team. I'd love to work with you. It's a small group, and it's my life's passion. So that being said, hope to see you on the next video.